Welcome to FX Hunt. For those who are new here, once again, welcome to FX Hunt. Right. So for today's course, today we are going to be looking at what market structure. We are going to be looking at market structure. If you're a beginner, you know nothing about market structure. You know nothing about the movement of the market, how to analyze the market, how to view the market, how to break down the market. In this lesson, in this course, we are going to be teaching you and showing you how to break down the market. You'll be educated on what market structure. You'll be able to analyze the market on your own. You'll be able to break down charts on your own. You'll be able to view the market in a very different perspective. You understand? So this course is going to be broken down from the beginner stage to the intermediate stage. So once you are done with this course, you'll be able to analyze the market and break down the market as a semi-pro. I won't use the word professional, as a semi-pro. So this is FX Hunt. For those who are new here, if you don't know of FX Hunt, here at FX Hunt, we give free courses like this to beginners who are interested in learning more about the Forex industry, who are just new into the Forex world. We give free courses like this, breakdown courses like this, to educate those who are interested in learning or knowing more about the Forex industry or the financial market in general. Before we dive fully into the course of the day, I want you guys to like this video, right? Click the subscribe button and turn on your notification bell so that you go updated whenever we drop courses or educational content like this. So now let's get straight into the course of the day. Now, what is market structure? Now, market structure refers to the way in which financial markets are organized, specifically how price move in response to supply and demand dynamics. Please, I want you to take note of the phrase there, how price move in response to what supply and demand dynamics. So when you're talking of market structure, you are simply talking about what how price move in response to what to supply and demand. So it is a critical aspect of technical analysis and provides trader with insight into the behavior of price action in various time frames. Understanding market structure enables traders to identify key turning points, trends, reversals, and potential trade setup. Now, before I break down this last part of this definition, I want you guys to look at the first part, which was talking about price movements in response to what to supply and demand. So the whole reason for market structure formation is as a result of what demand and supply. And when you are talking of supply, in a layman way of understanding, you are talking of what sale, right? The sales of products, sales. And when you are talking of demand, you are talking of buying. You are looking forward to buy. Supply, you are looking forward to what? To sell or selling, right? So when you're talking of market structure, you are talking of price movement in response to what? The buyers and sellers engagement in the market. Because without those buyers and sellers response, there will be no market structure. Right, so I'm going to hop right into the drawing board, and give you guys a proper description of what market structure looks like. Demand and supply movement, demand and supply response, right? So now let's hop right into the drawing board. Right here at the drawing board, so I'm going to be giving you guys a proper illustration of what supply and demand is all about, right? And how does supply and demand lead to the formation of what market structure. Now, when you're talking of supply, this is what we call supply. Sale, as I said earlier on, sale, this is supply, this is demand. Supply, the sell power, demand, the buy power. Supply, demand, supply, demand. So this is what supply and demand. So the process of price response to supply and demand, right? This process of price response, the things that are being formed in the process of what the interactions between the buyers and seller is what we call the market structure. So this is a market structure. What you see here is what it's a market structure. What you're seeing here currently is a market structure. So I'll give you guys another illustration again. Supply, demand, supply, demand, supply, demand, right? So now this is what a market structure. So the response of the market, or the response of price to supply and demand, what dynamics. The response of price to supply and demand dynamics leads to the formation of what market structure. So this is a market structure in general. Also, when we are talking of market structure, this is what we are talking of. This is a market what structure. This, as you see here, is a market what structure. So now I'm going to hop to the real chart and show you guys a live representation of what of market structure. So we are here on a live chart, right? We are right here on a live chart. So I'm going to be showing you guys a live illustration of what of market structure. Now, guys, if you notice, before we go further, guys, let me clarify something to you before we go further. Now, the blue candles are what are the demand, while the red candles are the supply, right? The blue candles are demand, the red candles are the supply. The blue candles, or you could say the blue candles are the buyers, in clear indication of the buyers, and the red candle are the what are the sellers. Now, if you look clearly throughout this whole chart, now if you look clearly in this chart, what are you seeing? Price, there's an interaction between what the buyers and the sellers, right? The price is not just going bullish without no interaction of what the buyers and the sellers, or without the sellers involvement. The market is not just also going bearish without the buyers involvement. So it's as a result of this interactive buyers and sellers engagement in the market, that's what leads to the formation of what market structure. So with what we're seeing here, you could clearly see this. You see demand, supply, demand, supply, demand. So the market is not just moving straight or moving impulsively with no response of what of the sellers. So it's because it's as a result of the interactions and the response of the sellers, despite the market moving in a bullish trend, that leads to what the formation of what a market structure. That leads to what the formation of the market structure. Now look at this scenario also. Now you can see supply, demand, supply, demand, supply, demand, supply. So this is what we are talking about. Now the interactive sections, the back and forth movement of buyers and sellers engaging in the market, it leads to what the formation of the market structure. So this right here is a market structure. This right here is a market structure. The engagement, despite being in a downtrend or an uptrend, the market is still going to be interactive, because it's this interactiveness that leads to what a proper description or a proper formation of a market structure that we use to predict and anticipate the next move that the market is likely going to what take. So market structure is a critical aspect of what technical analysis. So for those of us who don't know, there are three ways that you could analyze the market. You have what the technical analysis, you have the what fundamental analysis, and you have the sentimental analysis. So when it comes to the technical analysis, market structure is a critical aspect. You can't do without market structure. We are able to analyze and read charts in the technical point of view as a result of what market structure, the formation of what market structure, the response of what supply and demand, the movement of what supply and demand, right? So it is a critical aspect of technical analysis, and it provides traders with insights into the behavior of price action in various time frames. Exactly. The response of these buyers and sellers, the creation of this market structure, what it gives what the formation of what price action. It gives traders an insight into the behavior of price action, right, in various time frame. And please take note, in every time frame, there is what's going to be a formation of market structure, and each market structure, not minding the pair or not minding the instrument you're trading or analyzing at that point in time. For instance, let me give you guys a brief illustration. For instance, if you are trading US 30 on the 4 hours time frame, the market structure you are seeing on the 4 hours time frame is going to be different from the market structure you are going to be seeing on the 1 hour time frame, despite it is the same pair. It's the same US 30, right? Or it's the same Nasdaq, it's the same GDP USD, Euro USD. The market structure you are going to be seeing on the 4 hours time frame is going to be different on the 1 hour time frame. It's going to be different. The one on the 1 hour will be different from the one on the 30 minutes, 15 minutes, 5 minutes, 3 minutes, 1 minute, so on and so forth. So in each time frame, the behavior of price action in various time frame differs, right? The behavior and the creation of market structure differs. So I want you guys to take note of that. So understanding market structure enables traders to identify key turning points, right? It enables traders to identify key turning points, trends, reversal, and potential trade setup. It's as a result of market structure, being able to understand the movement of market structure as a trader, it will give you an edge to understand when the market is about to make a turn, is about to change trends, is about to reverse, and for you to spot potential trade setup. So I'm going to go to the drawing board again and give you and show you guys how we are able to identify key points using market structure. So here are the live charts. Now this is what I was talking about, key reversal zone, how we could use the market structure to identify key reversal areas in the market. So now if you look at this is a downtrend. This is a downtrend, right? So immediately the market changes. So it's as a result of this market structure formation here that we can identify or spot the change in the direction of the market. It's as a result of this market structure formation. So without this market structure, we cannot be able to identify when the market changes direction, when there's a reversal, right? We cannot be able to identify when there's a change in the direction of the market. So that's the power and the importance of market structure. We cannot be able to spot or take note that the market has changed direction. Likewise to spotting of trends, change of trends in the market. So as a result of market structure, we're able to identify that the market is clearly on an uptrend, as you can see. As a result of market structure, with this you can clearly see that the market is in an uptrend. So with market structure formation, you are able to see, or you are able to take note of the trends of the market as a result of market structure formation. Now if you look at this also, as a result of this market structure formation, we can identify and take note of the fact that we are in a downtrend. In this scenario, we are in a downtrend. So as a result of market structure, we can identify that we are in a ranging market. We are in a consolidating market. So this is the power of market structure. This is the importance of market structure in technical analysis. You can't do away with market structure. It is the creation of market structure that enables us to analyze, to know when the market is about to shift direction, to know the trend of the market, to know if the market is in an uptrend, downtrend, the ranging market, to be able to anticipate or take entries, right, based on our analysis, is because of the formation of market structure. So market structure is key in technical analysis. You can't do away with market structure, not minding the concept you are using in analyzing the market, right? You can't do away with market structure. The market structure gives us a clear interpretation of what the market has done, what the market is doing, and what the market is likely going to do in the future. So we need market structure. As technical traders, we need market structure. Despite our view or concept in approaching or analyzing the market structure, the response of buyers and sellers, the interactive and the dynamic move of supply and demand is needed, has to be taken note of as a trader when analyzing the market. We are going to be hopping on a real life chart to show you guys the interactive response and the change of supply and demand, right? The change, the trend, identifying trends and identifying the change of the direction of the market due to supply and demand. So guys, here on the live chart, if you look carefully, what can you identify? Now, if you look carefully, you could see that we are clearly on our uptrend. We are clearly on an uptrend. Why? Because there has been
an interaction between what buyers and sellers. There's been a market structure formation showing us and telling us that this is a what is an uptrend. This is an what? An uptrend. Look at this also. In this scenario, what are we seeing? Now we are in a ranging market. Why are we in a ranging market? How do we know we are in a ranging market at this point in time? It's because what the market structure is showing us and telling us that the market what is ranging. Without the market structure formation, we cannot be able to what identify, or we cannot be able to take note of the fact that we are what in a ranging market. So that's the power of market structure. That's the power of market structure. If you look at this within this short period of time here, you could see that we were in a downtrend. This is because we are in a market structure. This is because of the formation of what? A market structure. This is because of the formation of the market structure. And if you notice, immediately after the down move, the market switched and continued on an uptrend. So this interpretation, these things that are being displayed or that are being showed or formed on the chart helps us to identify when there's a key reversal. As you can see here, this key reversal, we are able to identify key reversal. We are able to identify key trends, like this scenario here, key trends in the market as a result of the formation of market structure.